What's up everybody, this is Gabe Lancaster with True Agency Real Estate. Today I'm going to be talking about the real estate market because are you worried about what's going to happen in the real estate market? Are you worried about the economy, about interest rates, about prices being too high? Today I'm going to take a deep dive into some data from past years in the real estate market. We're going to look at the 2007-2008 crash, talk about why today, 2022, is different than 2008, and kind of talk to you about what I'm seeing, what we're seeing here as a team in True Agency, and what you should be doing as a buyer or seller in today's real estate market. Let's get into it. So today I wanted to go over a couple of things about the real estate market and where we're at. First off, I want to acknowledge I am young. I'm only 23 years old. I've been in the business for 4 years now. So all that I've ever really experienced in the real estate market is the last 4 years, which has been appreciation. When I first got into the business, we had a little bit of a buyer and seller equality. Sellers were still offering to pay buyers closing costs. We definitely were not in the market that we're in today, which is definitely a heavy seller's market. We've seen 30, 40, 50 offers on one property. People are offering $50,000, $60,000, sometimes even $100,000 over asking price, and they're coming with crazy amounts of cash to the table. The market has definitely been crazy. It's been very lucrative for sellers, and it really hasn't been bad for buyers for the last couple of years because interest rates have been really low. We saw interest rates all the way down at 2%, 3% for a long time, and even though prices continued to rise, it was pretty easy for people to qualify just because interest rates were low. Now, fast forward to May of 2022, and now what we're looking at is interest rates at 5.5%, 6%. So now people who could qualify for these elevated prices before are having a much more difficult time stomaching the higher monthly payment for buying these expensive houses. So what do we do, or what gives? Sellers have to come down in price, right? Or buyers need to back out, right? Maybe not. One of the largest discussions that's being had right now is that we're in a bubble that's going to burst. Now, like I said, I didn't live as a real estate agent through 2007, 2008. I was a kid, but I wanted to take a look at worst case scenario. Let's pretend that you're a buyer who just purchased a home last year at the top of the market, and you're worried that now your home's gonna lose all its value because something like 2007, 2008 is gonna happen again where we experience a crash. Okay, let's play that out. What does that look like? So what we've got here is a graph. This is a graph from all the way back from 1996 all the way to 2021. These are median sales prices in Salt Lake and Tooele County for the second and third quarter of every year. Take a closer look at this. You can see that we experienced kind of an uptick in prices where everything started booming. This was like 2005, 2006, 2007. Then 2007, 2008, things started going downhill. We can see things start dipping, right? This is when the recession happened. This is when the bubble burst and everybody lost money. Everybody went through trauma. There was a recession, right? Okay, but let's actually take a look at what happened. Let's say you bought a house back in 2007 when the market was at its peak for the time. If you bought the average house, median house in Salt Lake or Tooele County, you were paying $250,000 for a house. So you bought a house for $250,000, the market crashed. In 2012, you probably were not feeling good about your purchase because the median sales price was down $60,000 from where you purchased your home. So your house that you bought for $250,000, 5 years later is now worth $190,000. That doesn't feel good. Nobody wants that. You don't want negative equity, it doesn't feel good. So if you were smart and you bought that house in 2007 and you saw how low your house was in 2012, you just waited. There were lots of people that did this. They just waited, they just held out. They made their monthly payment over and over and over again. You stayed consistent. I understand, sometimes it's not possible. There were people in 2012 that had to go through some really hard times. They had to sell their house and lost a lot of money. That happens, but let's say you were able to make the best of the situation. If you waited another, let's see here, to get back to 250, you waited another 3 years. So by 2015, median sales price was already back up to $250,000. So if you waited realistically 8 years from the time that you bought your house, from the time you bought your house in 2007, fast forward to 2015, your house is worth the same thing that it was when you bought it before. To make it even better, you wait another 5 years past then to 2020. Now your home's worth $150,000 more than it was before, and you're sitting pretty, okay? So the point is, while we did see a recession, while we did see a bubble burst in 2007, 2008, it didn't last. It doesn't last. And that's kind of the message that I want to share today, that yes, there is always a worst case scenario. Yes, your investments could always turn down, but from everything that I've paid attention to and everything that the investing gurus and real estate gurus talk about is that the best way to ensure that you don't lose your money on an investment is to wait. Wait. It doesn't mean that you wait to time the market perfectly. It means get in, get your house, buy your investment, buy your real estate, buy your property, and just wait. You don't have to time the market perfectly. You don't want to wait to buy in the perfect time in the recession. Sure, it would have been nice if you were buying houses for $190,000 back in 2012, because now you gained a whole lot of equity. But the people who bought in 2007 have just as much equity as the people who bought back in 2012 when things were at their lowest, right? It's not a major difference. These people did not lose if they held on, just like the people in 2012. So, what does all this mean? I'm not answering the question of whether or not the bubble is going to burst. So what do we think is going to happen? Well, in the last 2 years, we've seen a ridiculous increase in prices, right? It's like over 57% increase in prices. Is that sustainable? No. I do not think that it's possible for prices to continue elevating at that rate. But if you look at the trend of real estate over a long term, this graph trends upwards, right? Yes, we have dips. We have times where the market plateaus. And yes, we have times where the market spikes drastically. The point is, we can't control any of that. We can't manipulate any of that. What we do know is that we know what the market is doing right now. We're at a high point in the market. Let's say that we are at a high point similar to 2007, and in the next 2 years or so, we're gonna see a decline. Worst case scenario, in my opinion, is that we see a decline in median prices. You see it go down. You might even be in a position on a house that you bought a couple of years ago where you're now in a negative equity position, which again, doesn't feel good. But the main thing to focus on is you have to be able to make your monthly payments, right? Make your monthly payments, keep the house. The market will continue to trend upwards. Look at houses in California. Look at houses in areas that are more developed than where we're at here. The big thing to focus on here, and this is why I don't necessarily think that this bubble is going to burst, is because there is still a huge need for housing. We have such low inventory in the housing market, and basic supply and demand teaches us that when inventory is low and demand continues to stay high, prices will climb, or they'll at least level out, right? I'm not saying that we're gonna see 50% inflation or 50% increases in values over the next several years, but I do think it's very realistic that prices level out and maybe even continue to rise at a steady pace because our inventory doesn't allow for prices to come down drastically. There aren't enough houses out there. There just aren't. Wrapping things up, do I think that the real estate market is going to crash? No, I don't think it's super likely. Will we see a decline? Maybe. I'm not a fortune teller. I don't have a magic ball that gives me all the answers. And truthfully, nobody has the answers. Anybody that's out there saying that they know what's going to happen or acting like they know what's going to happen in the real estate market, frankly, is full of shit. Nobody knows. There are so many external factors that we cannot control, like interest rates, like inventory, like builders, like supply chain, like all these things that we cannot control as an everyday buyer or seller, real estate agent, lender. We can't control them. What we can control is the way that we approach the market and the game plan that we create to get you into your house or to sell your house or to meet your goals now. We can operate from the information that we have today. So the point is, if you're looking at buying or selling, I'm not telling you that yes, you should go buy or sell. I'm saying, let's figure out if there's a game plan that we can create that helps you accomplish your goals in today's market. Talk with an expert like me. Let's come up with a plan to help you reach your goals in buying or selling in real estate. Worst thing that could happen is we have a conversation, we discuss some options, and you figure out it's not a good time. Great. That's better than sitting wondering What if? Let's get together, let's talk about a game plan and figure out if we can help you reach your goals and move forward operating out of what we know today. So get in touch with us, whatever way that looks like. Give me a call, message us on Instagram, send an email, whatever that looks like. Get in touch with us and let's see if we can come up with a game plan to help you accomplish what you need to, because ultimately the things we can control are your monthly payments, where you're looking, how much you're spending. I know that we can get you to where you want to go. I don't really know how to end it.
Okay.